Australian tax deductions explained. The basic rules. At tax time, many Australians ask one question: what can I claim? But the better question is this: what makes something a tax deduction in the first place? At a very general level, a deduction usually needs a connection to earning income. You generally need to have paid for it yourself, not been reimbursed, and kept records. And if part of the expense is private, the private part usually needs to be separated. One of the biggest deduction areas is work-related expenses. These are expenses connected to doing your job. Depending on the work and the situation, this may include things like tools, equipment, phone use, internet use, or other work-related costs. For many Australians, working from home expenses are also part of tax time. At a general level, this can include things like electricity, internet, phone use, and home office running costs. But the method and records matter. Car and travel expenses can also come up often at tax time. At a general level, some work-related travel may be relevant, such as travel between work locations. But ordinary travel from home to work is usually treated differently and is often private. Tools, equipment and technology are another common category. This may include items like laptops, tools, headsets, monitors, or other equipment used for work. But if something is also used privately, the private part may need to be separated. Clothing is an area many people misunderstand. At a general level, some occupation-specific clothing, protective clothing, or compulsory uniforms may be relevant. But ordinary clothing is usually private, even if it is worn to work. Self-education and training may also come into the picture. This can include things like courses, seminars, textbooks, or professional development. At a general level, the key idea is whether the study has a connection to current income-earning activities. Some union fees, professional memberships, journals, or subscriptions may also be relevant where they are connected to work or income-producing activities. This is another area where the connection to income matters. Gifts and donations are another category people often ask about. At a general level, not every donation is deductible. The general idea is that it usually needs to be made to an eligible deductible gift recipient, and records should be kept. There can also be deductions connected to managing tax affairs. At a general level, this may include things like registered tax agent fees or some tax-related costs. It is a smaller category, but one many people overlook. Investment-related and rental property deductions can also exist. But this is where the rules can become more detailed. Expenses connected to earning investment or rental income may be relevant, but these areas usually need extra care and often deserve their own separate explanation. The safest way to think about deductions is not, what can I get away with claiming? The better questions are, was it connected to earning income? Was it private or partly private? Was I reimbursed? And do I have records? That is the basic mindset behind Australian tax deductions. If this helped you understand the system more clearly, subscribe to Finance Systems Explained Australia. This video is for general education only. It is not tax advice, financial advice, legal advice, or personal advice. Tax rules can depend on individual circumstances. So always check official ATO guidance or speak with a registered tax professional for your own situation.